This watch didn't just rise in price, it detonated into the stratosphere of global obsession, rewriting the rules of modern luxury overnight. The story begins long before the spike, long before the frenzy, long before headlines screamed about six-figure steel watches. Because to understand a surge of this magnitude, we must first understand the foundations upon which it was built. In 1976, during the height of the quartz crisis that threatened to dismantle traditional Swiss watchmaking, Patek Philippe made a radical decision. Rather than retreat into conservatism, the brand commissioned legendary designer Gerald Genta to create something audacious. A luxury sports watch crafted in stainless steel, priced at a level that rivaled precious metal dress pieces. The result was the Patek Philippe Nautilus, a timepiece inspired by a ship's porthole, defined by its horizontally embossed dial, integrated bracelet, and balanced proportions that fused robustness with refinement. At launch, it was controversial. Steel at that time was associated with utility, not exclusivity. Yet that paradox became its strength. The Nautilus represented a philosophical pivot. Luxury was no longer defined solely by material, but by design integrity, finishing excellence, and brand heritage. Over decades, the model matured quietly, appreciated by connoisseurs rather than speculators. Production remained limited, distribution controlled, and demand steadily compounded as collectors began to recognize the brilliance of its proportions and the technical precision beating beneath its dial. By the early 2000s, the Nautilus had evolved from an outsider to a pillar of modern horology. And when the reference 5711 emerged with its blue dial and ultra-wearable 40mm case, it embodied minimalist perfection. Its simplicity was deceptive. Inside was a meticulously finished automatic movement, while outside, its silhouette was instantly recognizable, yet never loud. What makes this crucial is that the eventual price explosion was not built on emptiness. It was built on decades of credibility, restraint, and narrative depth. Scarcity was not artificially manufactured overnight. It was embedded in the brand's DNA. So when the modern era collided with this historical backbone, the conditions for something extraordinary were already in place. As the digital age accelerated, the watch world stopped being a discrete collector's circle and became a global stage where visibility could multiply value overnight. And in that environment, the Patek Philippe Nautilus 5711 transformed from a respected luxury piece into a viral symbol of success. Social media platforms amplified every wrist shot, every celebrity appearance, every auction result, turning scarcity into spectacle. At the same time, low interest rates and excess liquidity pushed investors toward tangible assets, and high-end watches began to look like portable stores of wealth. Supply remained tightly controlled by Patek Philippe, while demand exploded globally, creating a dramatic imbalance. Secondary marketplaces, such as Chrono24, reflected the frenzy, with prices climbing far beyond retail and resetting expectations almost weekly. The narrative shifted subtly but decisively. The conversation was no longer only about craftsmanship or heritage, but about momentum, multiples, and timing. The watch had entered the realm of speculation, and once an object becomes financialized, its rise is rarely calm and never guaranteed to last. Then came the decisive catalyst, discontinuation. When Patek Philippe officially announced it would end production of the Patek Philippe Nautilus 5711, the market reaction was immediate and electric. In luxury, scarcity is powerful. In finance, finality is explosive. The confirmation that no more pieces would leave the manufacturer transformed an already constrained model into a finite commodity. Collectors who had hesitated rushed to secure one before prices climbed further, while investors interpreted the announcement as a guaranteed supply ceiling. Within weeks, valuations accelerated dramatically, in some cases tripling retail. Auction houses such as Christie's and Phillips recorded headline-grabbing results that reinforced the perception of unstoppable momentum. Media coverage intensified, framing the watch as the ultimate modern grail. What made this phase unique was not just the price increase, but the psychology behind it. Fear of missing out replaced patience. Rational assessment gave way to urgency. The narrative evolved from "this is a beautiful watch" to "this is the last chance." And when buyers begin acting out of fear rather than appreciation, markets tend to overshoot. The discontinuation did not simply reduce supply, it amplified emotion, and emotion is the most volatile force in any speculative cycle. At the peak of the frenzy, something subtle but critical began to shift. The profile of the buyer changed. Traditionally, acquiring a Nautilus required patience, relationships, and a genuine interest in horology. But during the surge, a new demographic entered the arena. Entrepreneurs, crypto investors, professional athletes, entertainers, individuals seeking visible symbols of rapid success. Public figures such as Drake and LeBron James were frequently photographed wearing high-end sports watches, reinforcing their association with achievement and status. Whether intentional or organic, that exposure amplified desirability across continents. The watch became shorthand for having made it. At the same time, flippers, buyers with no intention of long-term ownership, tightened supply even further by purchasing at retail and immediately reselling at significant premiums. This behavior created artificial scarcity on top of real scarcity, pushing prices to levels disconnected from intrinsic horological value. Conversations shifted toward arbitrage opportunities, allocation strategies, and dealer connections rather than finishing techniques or movement architecture. When ownership becomes transactional rather than emotional, stability weakens. A market driven by collectors tends to mature slowly. A market driven by short-term profit can reverse just as quickly as it climbs. The transformation of the buyer base, therefore, was not a minor detail. It was a structural change. And structural changes often define the longevity of a boom. But no market rises in a straight line forever. And as macroeconomic conditions began to tighten, the first signs of cooling emerged beneath the surface. Central banks increased interest rates, liquidity contracted, speculative capital retreated, and assets that had benefited from excess money suddenly faced a more disciplined environment. The secondary market for the Patek Philippe Nautilus 5711 began to soften. Listings accumulated on platforms like Chrono24, and asking prices, once climbing weekly, started adjusting downward. The shift was not catastrophic at first. It was gradual, almost psychological. Sellers who had purchased near the peak hesitated to accept lower offers, while buyers sensed leverage returning to their side. Transaction volume slowed. Auction results became less sensational, more selective. Importantly, this correction did not erase the watch's prestige. It recalibrated expectations. A timepiece that had been treated as a short-term financial instrument was slowly returning to its identity as a luxury object. The cooling phase revealed an essential truth. When valuation is driven primarily by momentum rather than fundamentals, any change in external conditions can interrupt the trajectory. What had skyrocketed on a wave of abundance was now navigating an era of restraint. And restraint tests conviction far more than euphoria ever does. Yet even as prices adjusted, the story of the Patek Philippe Nautilus 5711 continued to captivate both collectors and investors because its cultural significance had been cemented. Beyond mere numbers, it had become a symbol of taste, status, and historical continuity. Forums and social media remained abuzz with analysis, comparisons, and speculation about future releases, while the narrative shifted from frenzy to legacy. Limited editions, anniversaries, and collaborations reinforced the brand's careful cultivation of desire, demonstrating that scarcity combined with storytelling creates enduring allure. Meanwhile, traditional collectors began to reclaim the dialogue, emphasizing craftsmanship, finishing, and design philosophy over pure financial gain. In parallel, emerging markets and younger enthusiasts watched the saga as both cautionary tale and aspirational benchmark, understanding that owning such a piece is as much about identity and heritage as it is about investment. The phase highlighted a subtle but important lesson. Extreme appreciation may be temporary, but the cultural imprint and desirability of an iconic watch can persist indefinitely, ensuring relevance even when market prices fluctuate. The Nautilus had become more than steel and movement. It was now a legend in motion, a reference point for both horology and social capital. Ultimately, the meteoric rise of the Patek Philippe Nautilus 5711 teaches a multifaceted lesson about scarcity, perception, and human behavior. Its ascent was fueled by decades of careful design, limited production, and brand heritage, amplified by social media, celebrity influence, and macroeconomic conditions that favored alternative assets. The discontinuation acted as a catalyst, transforming desirability into urgent demand, while speculative buyers and flippers accelerated price growth beyond traditional valuation metrics. Yet markets are cyclical, and cooling phases reminded participants that even iconic objects are not immune to external pressures and changing sentiment. Despite these corrections, the watch's cultural and historical significance endures, reinforcing that its true value is measured not only in dollars, but in narrative, legacy, and influence. In the end, the story of the Nautilus is a cautionary yet inspiring tale. Extraordinary ascent can happen almost overnight, but lasting reverence and impact are forged over decades, reminding us that luxury, identity, and human fascination often outlast mere speculation. So, while the Patek Philippe Nautilus 5711 may have skyrocketed in price for a time, its true legacy is far deeper, shaped by design, history, culture, and the collective imagination of collectors and enthusiasts around the world.